Hello, everyone. We are Group 3. Today, we are going to discuss a topic that is revolutionizing the financial industry, financial technology, which is also known as fintech. The intersection of finance and technology has given rise to innovative solutions that are reshaping traditional banking and transforming the way we manage our finance. In this speech, our group will explore the key aspects, implications, and the futures of fintech. Before we dive into details, let's take a look at the definitions of fintech from HKMA. Fintech is driving innovation in financial services globally and changing the nature of commerce and end-user expectations for financial services. While the term fintech may carry different meanings, it is now commonly considered to cover the applications of artificial intelligence, blockchain, cloud computing, and big data in areas such as payments, clearing and settlement, deposits, lending and capital raising, insurance, investment management, and market support. Do you still remember how people did transactions 20 years ago? At that time, when the internet and technology were not as advanced as they are now, people generally used cash for transactions. But now it is totally different, right? How could that happen? I bet you have seen these pictures before. What are they? Why their existence have changed our payment and investment patterns? How does they work? Will there be any risk? I believe these kind of questions have crossed your mind. Now I will pass the time to Phyllis. She will tell us more about the technological advancements, and she will also try to give you the answers about these questions.
Thank you, Vicky. Let me introduce the three most representative fintech technological advancements and adaptations with the most mature developments. They are artificial intelligence, big data, and blockchain. First, artificial intelligence. We all know that the financial industry features in wide involvement, high informatization, massive big data, and high-frequency trading. For example, there might be many manual links in the business process. It is easy to generate operational risk and moral hazards. AI technology not only be applied to intelligent customer service and remote identity authentication, but also to investment advisory, anti-fraud, and intelligent risk control. It can speed up the cycle of product innovation, save the cost of system construction and operation, and realize the rapid iteration and upgrade of the system. Second, big data. Big data is the cornerstone for many emerging technologies. It can help collect information from various channels for analysis, application, and risk management, so as to achieve precision marketing and customer acquisition. Moreover, big data models can help provide customers with financial credit and assist various business decisions. Third, blockchain. Blockchain technology is the most adopted encryption tech in the financial industry. As for blockchain's application, depository, reconciliation, and settlements will be three categories gradually landing. In terms of depository, institutions can build a peer-to-peer and manual trust alliance chain network. Then, they use a shared ledger to record core data and achieve traceability to audit the whole business process. In terms of reconciliation and settlements, institutions can automatically generate reconciliation documents in real time based on the Alliance chain ledger and through the smart contract function. So what are the blockchain's advantages? Why is it widely applied in fintech? Basically, it can improve the timeliness and efficiency of reconciliation. Better still, with no pairwise reconciliation between institutions, transparency of cooperation can be improved. In addition, in the long run, after the official launch of the central bank's legal digital currency, all kinds of blockchain-based businesses are expected to achieve payments and settlement functions, greatly improving settlement efficiency and reducing operating costs. These mainstream fintech technologies increase efficiency and lower transaction costs. They can create huge business value for consumers and businesses. They are bringing substantial changes to the technical basis and business process of traditional financial services, which is really closely related to our life and career. Then, let me pass to Emma to introduce fintech's now and future.
Thank you. So let me continue with the current landscape of fintech. Globally, it is estimated fintech will have 2% to 6% share of the global financial service revenue, with an annual growth rate of 15% to 25% through 2030. And most of the fintech platform is helping companies streamline the payment process or provide financial service to their customers. They will also provide other value-added services like accounting softwares. For example, Block provides a range of payments and accounting services to the merchants. And for Hong Kong, there are great fundings provided from the public or private sectors to the small startups, PE, and VC for scales up. And HKMA had granted 8 licenses for the virtual bank since 2019. And Hong Kong has over like 800 fintech companies and 3,900 startups. And furthermore, HKMA established a sandbox to enable the controlled testing of fintech solutions and announced the FinTech 2025 strategy, which is shared in the guest lecture, to encourage the financial sector to adopt technology by 2025. And through these aspects, we could see how supportive is Hong Kong government in promoting fintech. And there are some more like future trends in fintech. We believe that there will be more regulatory technology appear as to assist financial institutions in complying with the complicated regulations. Using RegTech, we can speed up regulatory procedures while lowering costs and risk. RegTech can achieve the goal by doing data analytics, reporting, and automated compliance. And the second trend is in AI and machine learning, where they can perform tasks like fraud detection, risk assessment, customer service chatbots, and customized financial advice. This can improve the effectiveness, precision, and decision-making capabilities of financial institutes. And for the trends in DeFi, through open financial system based on distributed ledgers and blockchain architectures, it can deliver different financial services to the users directly and cutting out the conventional middleman. This can foster the mutual trust and increase asset liquidity. And for Web3, it can promote user privacy and ownership rights while fostering an open, connected digital world. Ultimately, maximize the potential of the financial market. So let me pass the time to Chris.
Thank you, Emma. So now let's talk about the challenges and concerns within fintech industry. So first question is, what are the main obstacles? So although the fintech industry has revolutionized the financial industry, offering many benefits to us, it still carries with many disadvantages and brings us lots of problems to solve, including the first one is security risks, cyber attacks, data thefts, which are mentioned in the course, like there are many phishing emails, unknown websites, and URL. And the third one is lack of regulation. So next problem is accessibility issues. First one is digital banks, the lack of physical branches, many fintech companies. Second is financial exclusion. They need to balance between the profitability and their social responsibility. The third problem is regulatory compliance. First is the compliance with regulatory requirements like anti-money laundering and know your clients. The second is legal and regulatory frameworks designed by Hong Kong MA. The third one is keeping up with the regulatory changes. So the fourth problem is scalability challenges. First, we have many outdated technology. As we know, we have Web 1.0, Web 2.0, and nowadays we have Web 3.0. So the next one is software quality. And third one is the intense competition within the fintech industry. So now that there are more examples to come, the first one is Uber's data breach. As mentioned in the course, the Uber data breach began with a hacker purchasing stolen credentials belonging to an Uber employee from a dark web marketplace. So the hacker managed to get an MFA approval from the employee, which ultimately led to the data breach. The second example is the collapse of the FTX. FTX stood as one of the largest cryptocurrency exchange platforms, and it collapsed in last year in November. And the collapse of FTX caused a huge impact to the entire financial industry. So now let's take a look at this map. So according to Statista, from 2018 to 2021, the number of fintech companies in Americas in EMEA region and the APAC region almost tripled, and there's a huge rapid growth. of fintech companies. So now let's take a look at this chart. So we can see from this chart, some countries like China, almost 90% of citizens, they are using banking and payment, financial management, financing, and insurance services within the fintech companies. So now let's mainly focus on, is fintech a threat to traditional financial industry? Let's mainly focus on the fintech versus traditional banks. So for fintech companies, the way they're doing business is innovative, customer-centric, 24/7 access. So in terms of regulations, they're without strict regulation, and they have immature system. In terms of growth potential, their convenience, their inclusion and sustainability. In terms of risk factors, due to their flexible nature of fintech regulations, they're of course riskier, but their benefits outweigh their risks. So for traditional banks, the way of doing business, they are very traditional, process-oriented, they adopt less new technologies. So regulations, of course, they have very strict regulations to ensure the transparency. And of course, traditional banks are safer. So in terms of sustained market share, they have already sustained a huge amount of market share, and they need to adopt more fintech features to secure their market shares. So in terms of risk factors, because of the strict regulations, they lead to lower risks, and they provide with better customer experience with the fintech. So in conclusion, fintech companies and traditional banks, they both work as financial intermediaries. So a win-win situation for them both is the long-term partnerships that combine the innovation within fintech and the support and trust within traditional banks to build a sector for the digital future of the world. So next, let's welcome my teammate Joshua. Yeah.
Thank you, Chris. Now I will share with you what fintech means for professional accountants. Nowadays, fintech and Web3 has greatly changed our lives and business environment. Accounting is no exceptions. Firstly, professional accountants are adapting to fintech. For example, bookkeeping has been completely automated. Cloud accounting platforms are now universal. New Zealand-based Xero provide a cloud accounting and reporting platforms, while Receipt Bank from the UK enable the invoice and the receipt to be processed via smartphone photos and emails. This means accountants can save a lot of time and effort to focus more on advanced analysis and strategic planning. Next, fintech free professional accountants to work on better things. Accountants are now in the data analytics sphere, and they can leverage data analytic tools and algorithms to identify and interpret financial patterns, trends, and all things more accurately. By studying data deeper, accountants can give more valuable financial advice and decision support, helping businesses make wiser strategy and decisions. Lastly, fintech promote the developments of cloud computing and online collaboration. Through cloud software and platform, accountants can more easily store, share, and collaborate on financial data. This makes real-time communication and collaboration with clients, team members, and other stakeholders become more convenient. This not only improves work efficiency, but also enhance information sharing and teamwork capabilities. As fintech become more part of economies and society, reliable analysis provided by professional accountants is crucial for fintech. As future accountants, we need to understand and apply this new technology and business model to adapt to industry changes. Innovative technology like digital payments, blockchain, and smart contract are changing the landscape of finance and accounting. Therefore, we need to keep pace with the times, providing clients with innovative financial solutions and services. Finally, we cannot overlook the information security, risk management challenges of fintech. With the rapid developments of fintech, data security, privacy protection, and compliance required to have become particular importance. As future professional accountants, we need to pay attention to and address these challenges to ensure financial information is properly protected and managed. That's the end of our presentation. Thank you.